same elements. And I aim to show how many intellectuals use fatherhood as a rhetorical tool in Black liberation discourses. So overall, the long story, in my opinion, of Black liberation and uplift often centers on Black fatherhoods without ever foregrounding their perspectives. And historians often work around this dimension of gender analysis while problematizing masculinity. So I hope to insert my work into that conversation.
So what were the barriers to successful Black fatherhood?
Barriers are pretty much what you would expect, especially during slavery, that there obviously was no room for expression or for Black men to hold any sort of position of authority. I actually came to this idea of studying this topic because of a quote that I found, which I'll paraphrase from Frederick Douglass in My Bondage and My Freedom, where he said that slavery has no use for either fathers or families, and that when they do exist, they are not outgrowths of slavery, but are antagonistic to that system. So I wanted to, with regard to slavery, analyze that quote and sort of bring it to life with actual examples from narratives, and sort of back away from that a little bit to get a more panoramic view of how that may have applied to other forms of oppression after slavery.
Would you say there's a continuing negative legacy of what you just described?
I would say that, yes, there is a continuing negative analysis of Black fatherhood, not only within the academy, but also in popular conversation. I think Black masculinity, especially right now as we're in an election season, often comes up to be something that is criticized or disparaged for whatever phase of evolution it's in at that time. With regard to the Black liberation movement, it's often at times of calls for change and uplift that masculinity comes back into the conversation as something to be criticized.
Criticized how?
Well, I would say in the present day, since about the 1970s on, it's been criticized in the sense that, and Tommy Curry, the philosopher at Edinburgh University, talks about this a lot, that Black masculinity is often equated to this mimetic thesis of Black men trying to emulate or imitate white patriarchy in its most negative expressions with regard to trying to dominate or oppress others, and sort of aligning with the worst characteristics of white patriarchy. In the present day sense, that would be with, far right ideas or oppressing a woman's right to reproductive rights and things of that sort. So that's been in the conversation a lot lately. I've been trying to disengage from the political, but it often does come up.
Mm-hmm. So how does Black fatherhood differ from other versions of fatherhood?
So in my research, it's different because, first of all, it's not encouraged in the sense. So that I'll start with where I start in my research, which sort of does go back to the quote that I started with from Frederick Douglass, that Black fatherhood is often antagonistic to the system. So the first time that we...
Oh, tip there, Brother Will. Yeah, that's one of my favorite broadcasts is Dr. Gerald Horne over there at Freedom Now, KPFK. So let's go to our inventory. And we're still getting beat up by SCMI. But you know something? Before I go and get scared about SCMI, let me go ahead and pull those deltas in. Now, we're 21 deltas. So we're going to pull these deltas down. Let's see. See, that's the thing. we're still, man, this thing actually went up in price. Let's just check it. We're 21 deltas short. So no, it's just a volatility play. We're still getting hurt on SCMI, but look at that. It's like, I mean, now it's deltas long. Look at that volatility curve. That mountain is so underneath. But the thing about it is volatilities mean reverting. So I'm not going to freak. I mean, with a 21 or 15% rise, volatility is just, I mean, it is what it is. There's nothing you can do. Our direction is we're now it's showing short 21 deltas. We're at like damn near center in terms of this particular trade. In other words, it's saying that our cost side is getting challenged now. Before we were 15 deltas short. So basically, we got a scenario where, I mean, our calls are definitely not getting challenged by any means. The call side of this trade. The put side of this trade is definitely not getting challenged by any. If we look at it in terms of our deltas, we're 19 deltas here short, and we are, okay, now it's 43 deltas. So yeah, so basically, yeah, I could see why these deltas are changing. That's a volatility thing. That is definitely a volatility thing. So anyways, sit on my hands, do nothing. Volatilities mean reverting, and none of our strikes are getting challenged. So it's not like I have to go in and replace. Now this one, X, we're definitely going to roll the strikes down on that. X is U.S. Steel. No, look at this. Same thing with U.S. Steel. If I roll these strikes down, I mean, and again, we'll wait for it to populate. It's just the data thing. If I roll these down, I'm already, I'm already getting challenged at that strike. Down here, we're a lot closer. So we are definitely delta. We're long deltas on X, but we're only 4 deltas long. So I got to just sit on my hands. I can't do anything. We're 4 deltas. So it's not like the deltas are getting challenged. Again, that's volatility. Pure volatility just going buck wild. And if we see that, we'll take a look at where we're at. We're damn near, we're a little bit, just a little long deltas, but other than that, I mean, literally we're like kind of toward the center. So I got to just sit. There's nothing I can do. Now, if things get completely crazy, what I could do is roll this out to the next month. Again, we've got, on these particular trades, we've got 32 days. You normally don't want to roll them out until, if we rolled it out an expiration from there to January, if we rolled it out to January, we get like, there's no buying power, basically, buying power is flat. The thing is that gives us a little extra time. We will be getting a gangload of credit. We'd have a little extra time to actually be right. But still yet, volatility is just, I mean, it's just ridiculous. It's huge. The volatility expansion. So something's up with this stock. Somebody believes that this stock is either going to crash or either go to the moon. But somebody believes that this SCMI stock is, it's in play, as they say. Something huge is about to go down on this. The fact, I mean, look at those deltas. They're just literally, but we're still in between our strikes, like right in the middle of the strikes. At least, I'd say if it's trading at 22, that's 7 down, 22 up, 6 up. So literally, we're like right in the middle of those. So that delta situation is definitely volatility driven. That's a vol play. Let's see, what else do we have to address? Yeah, so I can't really do anything. On X, I could roll this out. But again, it's not like the strikes are getting challenged. If we roll it out till January, give it 60 days. We'll pick up $1 credit if we did that, but there's nothing I could really do. Volatility. That's a volatility play. I could roll it out to January, get $1 credit, and no real effect on the buying power. Nothing huge. It's not really like, the thing is it's a volatility, the vols. So we'll see. We'll just, and that's up only 37 cents. I would be more prone to rolling this one out. We still get, we have that 71% chance of it. Let's see what happens if we rolled it out there. The 45.33 put in January, 45 called, 33 put in January. What are our deltas? So that puts us at a 66% chance that'll get touched, and 66 on that side that'll get touched. If we rolled it out there and we got our, we picked up $1 of credit, you know what I'm gonna do? From 125 to one, I'm just gonna do something ridiculous and put this up. And if it gets filled, it gets filled. If it don't, it don't. I'm gonna try $1.50-ish credit because it's in between our mid price and the ultimate of what we want to sell it for. So we're gonna do that. There's nothing. I'm just gonna do that and see what happens. Again, our strikes are not getting challenged, even though SCMI is like ridiculous in terms of the deltas that we're delta long. Thing is we may be delta long, but the funny thing is that's all volatility, pure volatility. So something's up with this stock. Either it's going to crash or it's going to go to the moon. This thing is in play. There's no earnings, there's no dividends, there's nothing like that coming in. So there's something really, really crazy going on with this. And you know what? Let's check the news on it. We'll check the news and see if there's any kind of SCMI research news. It's just seeing the volatility just go crazy. Oh, hold on for 1 second. Let me go get my tea. Anyways, yeah, it's definitely an interesting trade. Very interesting trade. Hold on for 1 sec. I had to go get my tea. I had to go grab the tea here. Oh man, my back is killing me from the other. I walked miles and miles the other day. My feet were doing a lot better. I walked about 2 miles yesterday, but I walked about 7 miles the day before. And today I'm gonna try to walk 8 miles. Do an 8-mile walk later in the afternoon. I'm trying to get up to 300,000 steps a month. I was up to 200,000 steps last month, but I'm trying to get to 300,000. I'm just looking at let's see, SCMI. U.S. stocks in the move. SCMI, Super Michael Drumson submit plan with NASDAQ to avoid delisting. Here you go. There you go. Which means that if this thing delists, jump 12 on pre-market, intends to submit a plan on Monday to allow it to continue to trade on NASDAQ stock market. Wow. So this is okay. Delay of filing report quarters after it filing annual report for the end of June. So they missed the filing. Wow. So yeah, the stock had fallen 35%. So that's what goes on with SCMI. Okay. So yeah, so they were about to get delisted. Interesting. Let's see what YX, the other one that's got a volatility freak out. U.S. deals blocked by regulators are facing intense scrutiny. That was last week. Okay. Nippon still seeks to close U.S. deal before Trump returns to White House. That was earlier. So I'm kind of curious. Okay, this CPR, that doesn't say anything about X. Current deal's being terminated. Let's see if the X deal is terminated. See if that's what is if that's what is causing the massive volatility spike in X. Now X, I don't expect X to go to zero. SCMI, yes, I could see that Supermicro going to zero. You know, because it's trading like a penny stock, and all the volatility is there, saying that that's pretty much. In other words, the company's more than likely going to go belly up. That's what SCMI is saying. That it's because it's down 35% already. So my thing is getting enough credit out of this. You know what? I may roll that to get enough credit out of this since it's going to zero. And then that way I could get some of that money back. U.S. deals blocked by regulation facing. I didn't see anything on X there. I don't know if you saw it. You've been terminated or facing regular. Let's see. U.S. Steel. I didn't see anything. Maybe. Okay. U.S. Steel. Do you see anything on U.S. Steel that are under scrutiny? In other words, Trump's coming in and U.S. Steel, and that may go down, but it's not going to go out. Because, you know, by his own Nippon Steel, there we go. Still no U.S. Steel billion has faced still opposition by both newly elected president. Okay. And the outgoing top. Okay. We already knew that. Okay. We knew that to salvage okay. They were trying to salvage it. We knew that. So that's already baked in the cake. So yeah, the U.S. Steel trade, that's baked in the cake. I am going to try to roll that U.S. Steel out just to get some more credit. And you know what? I think I'm going to roll SCMI out too, because I'm going to try to get as much credit as I can out of that, because that's basically going to zero. Roll strikes expirations. So if we go out to January, and we're going to try to get more credit, and then we'll back it down as the day goes by. Because I don't think the NASDAQ deal that they're doing with that, I think they're going to get delisted. And so I'm going to try to get whatever credit I can out of this before it gets delisted to get some of that money back. So now I see why volatility is going through the roof. Okay. Because, you know, once they're delisted, it's pretty much done. You know, it's pretty much over. So SCMI, okay. It's a lot better in terms of volatility. It came down a little bit in volatility, but again, same with X, just a little bit. But when you're actually on, IV rank 120, look at these IV ranks. It's just ridiculous. What that means now, the X, I can see that in terms of these, you know, the volatility. Usually when it goes up like that, and a lot of this is because of Trump, chances are, I should say Trump and Biden, chances are it'll go ahead and normalize itself, because U.S. Steel has been around forever. Supermicro, that has not been around forever. That stock is it's basically gonna go out. That stock is gone. So the thing is, when I get in situations like that, because nobody knew that stock was going to go to zero, even though it's had major problems. The fact that it's, you know, that it is a penny stock now, usually that's kind of a sign that says, that this thing is, it's time to 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 take it to the farm. It's time to go ahead and get rid of it. So yeah, that stock, I mean, that's interesting because it's been around. It did real good, but I'll give it less than 10 months, and that stock it'll be at zero. My thing is get whatever credit and get out to cut the losses. That's what everything's about, cutting losses. Okay, this one, if it gets into our wheelhouse, which is right here, then I'll go ahead and just cut this trade, which is and that'll be like a $7 loss, because basically this is a Bitcoin play. It's ARK Invest. The reason I say it's a Bitcoin play is because she and Elon Musk, I think he's had a thing. I think they had a little affair. Kathy Wood and Elon Musk, they used to do these live streams. Look at Bitcoin down 1,000, and so therefore you're seeing why a lot of these Bitcoin stocks were falling, which is like this weed cannabis stock, the MSOS. I mean, that was nothing. We put that on for like what? I mean, it was like literally what? How much did like $20 for MSOS? No, yeah, 25 cents. MSOS is a joke. So we're going to stay into that because I think I put that into February. Yeah, so that stock, that's weed, that's cannabis. Everything else is pretty much delta neutral. We've got delta neutral, ARK Invest, delta neutral. So the only ones we had to address are the stock that's basically on its way out, which is SCMI, which is basically going to, it's over. It's over for that. And U.S. Steel. So I'm not as worried about U.S. Steel because of the fact that U.S. Steel is an American staple. So I'm not freaking on that. So anyways, looking at markets, even though I did that earlier, E-mini S&P is flat. Basically, the whole thing is flat. VIX/VX, flat. VIX is flat. And the cost of money, and that is basically just barely ticking down. So that's basically flat. So markets are basically flat today. For opportunities, I wanted to show you something. Again, Mark, he's one of my favorites. Let me see if I can show you better than I can tell you. But I'm digging the fact that to address these trades, again, when you have a market loss because of volatility, that's when you want. When I say it's market, it's not necessarily realized yet. Or realized gains. Either way, if they're unrealized, especially if the gains are extremely high, then yes, you'll want to go ahead and take those gains because it's like it's a lotto ticket. It's not realized. If it's a marked loss, basically in terms of volatility and not deltas, I'm more than prone to sit on my hands because when it's deltas. Like, when this thing falls, if it starts to fall, then that, hey, I got to address this because then you're going to start having your in the money strikes that you got to address. When it's just volatility, the only way that I can address it is by selling, trying to sell it by rolling strikes out to another month. Rolling it out to another month for the fact that to try to get more credit. So therefore, when it does go back, and because volatility is the only thing, not only, but it's the most mean reverting thing. So if it goes way out, like because we've had a major volatility expansion, we sold the volatility and it expanded like crazy. Well, volatility is almost always mean reverting. Okay, it's dang near always mean reverting, which means it comes back in. Okay, and so the thing is being that it comes back, then that it snaps back like a rubber band. A lot of times folks will move things around or get out, and then all of a sudden it does what it normally does, which snaps back, and then it's like, oh man, I should have done this, I should have done that. My thing is more like, since I know it's mean reverting, if it's not the deltas that are getting hit, then I'm just going to sit on my hands. Okay, I'm going to sit on my hands, or I roll it out and try to get more credit. And that's more like I'm doing right now. Is just going to try to get as much credits as I can on this particular, because it's scary. It could be scary looking at that, but in all reality, volatility is mean reverting. I'm not gonna totally freak. I'm gonna try to take advantage of it. But anyways, let's. I want to show you something because I really dig this guy right here, and this is what I meant by buying volatility, because volatility overall is pretty low. Okay, overall it's pretty low. Markets are flat, but volatility overall is low, which means it can expand. But this guy, man, I tell you, him and Sheridan are great for volatility. When volatility is very low, when it starts to expand. So I'll play it for you.
Hello again, everyone. Welcome to the Options Mentor. And once again, we had a little bit of crazy movement in the market this week, had a pretty good sell-off on Friday after the Fed chair said the day before that they weren't really in a hurry to cut rates further. They could be patient. Of course, the market doesn't like that. Drove the market down, also drove the VIX up. As I look into next week, there's really not all that much, scheduled news there. There's some Fed speakers I'm sure will have an effect on the market. And there is also a report on Friday. I forget which one it was, but I don't think that it'll be that significant. So I do think that this coming week, even the week after Thanksgiving week, should be a decent time for the market to trade a little more complacency, a little more manageable range. So I will talk to you today about a trade. I think it looks good for that this week. And I also, after that, I'm going to go over today how I select what trades I'm going to do. I get asked this all the time. How do you decide what trade that you're going to do each day or whatever, or whenever you're getting into one? I'm going to review that a bit here after I talk about a trade for this coming week. So let me share my screen here, and we will be looking at a VIX chart. So the VIX chart here shows, we were up at all-time highs. Now we've kind of sold off a little bit. VIX is, this is the SPX chart. We've done that. Then the VIX itself has rose up a little bit. It was all the way down in the 13s the other day, which is great. I was looking forward to doing some calendars this week, but now that VIX is elevated a little, that causes a little more pause. So the trade I'm looking at this week in the SPX is a double long diagonal. And I went out to the 29th for that, which is a week from this Friday. So the double long diagonal requires, of course, when I do double diagonals or even diagonals, they're always what I call long diagonals. Long diagonal means that the long on each side is purchased ahead of the call, meaning that it will come into the money sooner than the short call or the short put will. Here you go. For example, I use Friday's close, 58.70. If we go up here, I went up about 50 points to 59.20. And then I sold to 59.25. You see the long is going to be in the money first. And down on the downside, I did 58.30 for the long and 58.20. We're about 10 points closer on the downside than the top side because volatility will help you here if it goes down, and you can usually be a little closer with your put diagonal than your call diagonal. But what we're really looking for is it to just trade sideways inside of our graph, our expiration graph, where this blue line is above the zero line, and just pick up our theta. Starts out about $60 a day in theta. And I would be looking to get out of this trade at 8 or 10% profit, hopefully by this Friday. And if you look at this Friday's expiration, that's the 22nd. Let's look at that real quick. The 22nd, we're about 100 points on the expected market maker move between now and then, plus or minus $97.32. So when I built this, I wanted it wide enough to really stay in that range. And take a look. If we go up 100, we're still inside this expiration graph. If we go down 100, still inside the expiration graph. So this looks really good here for this trade. That's why I like it. I look to get 8 or 10% of what I paid for it. Right here, it's trading for $11.25, maybe $120, and get out of it. And if we just tick forward on the day here, which just shows what time decay would do for you, by Thursday, we could certainly be out of this trade maybe even Wednesday, just on time decay. Now remember, volatility is also a factor, so it can help us, it can hurt us. That's around $113.90 per point of it working for us or against us. So this is the kind of trade, hey, try this out on paper. You certainly shouldn't do these trades live if you've never done them before. Try it out on paper, see what you think. And don't ever do any trade live till you've done that, and make sure it's, of course, right for you and your situation. So one of the things, like I said, I would talk about today is, how do I decide what trade I'm going to do? Well, what I like to do is use the VIX. So I'll look at the VIX. We can see it's 16.14. Now I will talk about my very rough guidelines. It doesn't mean I'd never do a trade that didn't fit these guidelines, but I pretty much stick to it. And that is, if we're under 15 on the VIX, I prefer calendars. They're long vega, better in low volatility environments. They have great time decay. I really like them, especially when you get to 12 and 13 on the VIX. That's why I was looking forward to doing some this week before the VIX got a little higher. Now, you could do them here at 16. I just expect over time that performance probably wouldn't be as good. So that's calendars under 15 on the VIX. Next, let's talk about diagonals or double diagonals like this. I like to do those from 14 to 25 on the VIX, and I've done it in all that range and had success. I think they really shine between 15 and 20 on the VIX, but it doesn't mean they won't work down to 14 or up to 25. I've had them work just fine. They do seem to tolerate volatility going against them a little bit better than calendars. That's why I'll do them in a higher environment. Also, with the double long, you're getting so wide, which is very nice, gives you a lot of room for the price to roam. That's what we want. We want to put a trade on, let it roam around, and let our time decay come off. That's why I call them non-directional. It can go up some, it can go down some, and we can still make our money. So then that leaves butterflies. Butterflies, I like to do from about 15 to 25 on the VIX, sometimes 14 to 25. That's when I would do butterflies. Now, when I do butterflies, I like them to be at least 3 weeks out. So probably go out to like December 6th, which is out here on a Friday. And then if you did a butterfly, let's just say, for example, I did one, let's see, we're at 58.70. I'll just put one there at the money, and I'll do a butterfly here, probably asymmetrical because then it's flatter. Maybe go up 70 points to, that would be 59.40, down 70 points to 5,800. There you have it. Let's take a look at it in the risk profile. We got to get rid of that double diagonal. There you have it. Now you can see with this, it does taper off a little more on the upside than the downside. But we are, oh, wait a minute here. This should be down 80 points, my mistake. So up 70, down 80. So if we're at 58.70, if I go up 70, I'll be selling or buying the 59.40. And if we go down 80, I'll be at 57.90. So 80 down, 70 up gives us a pretty flat graph. You are down a little more on the upside than the downside. But I like it this way. I don't like to come in closer, because look what happens whenever you do come in a little bit closer. Let's say I even did this for the 29th. Look what happens. It tapers off much. You're up down over $200 on the upper edge. That's why I like at least 3 weeks on a fly. You know, my all put fly is 35 days and more out. I've done flies 60, 70 days out. Perfectly fine. There's really no limit to how far out you can do. What you would get from that is, of course, slower time decay, but you'd also have a trade if it went against you, would hurt you a lot less if you have more time on it. So that's butterfly. So butterflies roughly 14 or 15 up to 25 on the VIX. So that's my ranges for trades. Let me just model a calendar here real quick, just to talk about it a little bit further, these different guidelines. So let me get the 29th, and I'll just buy a calendar just to model it right around the money, which is what I normally do with calendars. I normally put them somewhere right around where we're trading. And so a calendar something like this. So once again, under 15 usually like calendars, 14 to 25 diagonals, 14 to 25 flies. Of course, there's some overlap there. So how do I decide there is that overlap? So let's suppose I go into tomorrow and I have nothing on at all. What would I do? I'm going to go over and look at the VIX. It's at 16. Most likely what I'm going to do is a double long diagonal. I don't know which way we're going, so I just want to have a lot of room. So that's probably what I would choose. Completely viable if you wanted to do a butterfly. And you could even do a calendar. Probably the calendar would be my last choice with the VIX at 16. So another factor that can come into this is I don't generally want to do two trades that are separate from each other in the same expiration. For instance, normally I wouldn't do a double long diagonal and a calendar in the same expiration. You can do it, but I consider that a little bit more advanced. You need to really have what you're doing down pat, because you got to be careful. You could walk on other strikes, take off strikes that you didn't mean to because you were maybe putting on one trade, and when you did, it took off part of the other one. So you got to be careful. So I think that's a fairly advanced thing to do. I don't usually do it myself, but I do occasionally. So that's a factor. If you already have this trade on, let's say I come into tomorrow, I've already got on a double long diagonal. What if I did? What could I do? Well, I could still look at a butterfly. It's out even further. So I just probably pick from one of the other trades. If I already have one of them on, I'll probably look at the others. For instance, a double long diagonal, I already have it on. I might look at a fly. You could even look at a calendar. Now, if you wanted to do the calendar, yes, you could do it for the 29th. But like I said, I think that's a little bit more dangerous. What I would probably do is come out to December 6th, the following Friday. And that's about as far out as I like to get with long Vega trades. About 2 weeks from the Friday of the week we're in is about as far out as I ever get with long Vega trades, whether they're diagonals or calendars. And in flies, I have that 3 week minimum. You can do as far out as you like. So if I already had a double long coming into tomorrow, then I might even add a calendar here or a fly. Now, if you came in tomorrow and you had a calendar on, and I saw 16 on the VIX, I would definitely be going with the double long. And if the calendar was already in, say, the 29th expiration, then I would go to the 6th expiration for that trade. So now let's say I did that. I had the calendar on, and then I come in and put on the double long. Now I have those two trades on. Now it's maybe Tuesday, Wednesday, and I want to add one more trade. I only like to have 2 or 3 trades on at once. I just make them bigger if I want to get more capital deployed, because if the market goes haywire, I like having very few trades to deal with. So I'd rather have even 2 or 3 large trades to deal with than multiple smaller trades. That just gets a little hectic. So if I came into this week, I already got on a calendar. I added a double long diagonal tomorrow if the VIX was here. Maybe wait a day or two. I want to do one more. Let's say the VIX is here or maybe a little higher. Well, I'd probably go with the fly going out at least 3 weeks. And now I have on 3 trades. That's going to be it for me until one of these comes off. And then when one of them comes off, you can look at another one. But what?
Anyways, yeah, I mean, he's one of my favorites. You know, Mark has always been one of my favorites. You know, so anyways, you know, getting back to their markets, you know, we were pretty flat. You know, but yeah, I mean, hopefully you saw that, because that was one of the websites I gave you. One of the guys I told you that I watch consistently, just because I like his logic. I would never trade because, you know, I don't trade his trades. I always trade my own trades. But I just like the logic behind a lot of what he talks about. But him and both him and Sheridan Mentoring. I really like the logic. Okay, 147 to 160, we're getting somewhere. Let's go in, replace this. We're going to go down. Now we're getting somewhere. Okay, because I'm going to try to roll these. Okay, just to get it out to January, because I have a feeling SCMI is going to zero. I'm almost sure that stock is done, and I want to get as much credit as I can. X, I could care less. X is, you know, I mean, X is X. Look at that, 102, 103. So that's going down in terms of credits. So we're still going to try to go, we're 102 to 170. So we're going to try to go in the center. Again, this is all about volatility. It's not about where the market is. It's just about how volatile, because we know why now. We know that these are situations, SCMI is down to 17 deltas, and we're down only to 3 deltas here. Let's see what happens with E-mini S&P or the SPX. So, I mean, it's barely up. Basically, we're flat. So, yeah, we've definitely got some volatility issues. My thing is I'm just trying to mitigate any pain. Get rid of a little pain. It's not terrible, but just get rid of a little pain by rolling these out to the next months. Because volatility is still high, and I want that vol. I do want that vol. It just means I have to stay in the trade a little longer than I want. We're December, January, so what? Our deltas are still, the X deltas, I'm not even going to freak on. X deltas are X deltas. These deltas right here, if we look at that and see if has volatility changed our deltas, we go to where we're at. We got a 41% chance that it's going to hit the bottom because we double our deltas for touch, 21 deltas. We still have, now we've got a 72% chance it's going to hit the top or at least touch it. Why? Look at, again, volatility. Even though we're actually the same amount of strikes away, the actual, we're literally 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 strikes to the downside. We're about 8 strikes to the upside. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. No, we're actually 12 strikes to the upside. So, I mean, we could do it in terms of dollars. It's $20 here. We're $8 to the upside, $20 here. We're $5 to the downside. Okay, so literally, this is pure volatility, and I mean, just plain and simple. They think that the stock is going to get delisted, and once it's delisted, it's basically it's done. It's over. The stock will not ever come back. So my thing is, at least get one more month out of this in terms of credit, and then wherever it's trading at that point, then that way it'll be a lot easier. Because the thing is get credit. That's the ultimate goal of selling premium, is to get credit. Nobody knew it was going to get delisted, until, well, I mean, they knew that there was an issue. This thing was down, what, 35%? 35%, and it's barely up today, just barely. So, I mean, 35%, of course, after, I think that was earnings. No, I think that was Trump. Let me see if that was either Trump or earnings that caused it to collapse. I'm trying to think which one it was. It was one or the other that caused it to collapse. Either way, it's done. I mean, the stock is over. So right now, I'm just trying to play to go ahead and mitigate any kind of pain, to take some losses off. So that's the only thing to do on a stock that gets delisted, a stock that's basically going to go out. It's done. Okay, let's back this off just a little bit. We're at 146. I'm just going to try to see if I can get some credit on this. We'll try 150. Yeah, a stock that's going to zero. What it is, just get as much credit as you can, and then get out when you've gotten, like, I think our initial credit was like 200 or something like that, or 281. So if we could mitigate and take at least, if we could make it like a 15% loss, which would be like $30, $40 out of 200, then hey, that's cool. And that's what you do. You get as much credit as you can to mitigate the loss. X, leave it alone. The rest of the trades are pretty much where they're at. I'm not going to really do anything because they're all pretty much where we want our deltas. XLF, I believe that was a vertical. No, that is, Yeah, that's a vertical. Thinking that XLF, no, that's a calendar. So I'm gonna sit on my hands in that. That was a calendar. Okay, we want that to go down. VIX, we're gonna sit on that. That's pretty much a done deal because VIX is not going anywhere anytime soon. Okay, hold on for 1 sec, man. I could tell the weather's getting in because I'm starting to sneeze like crazy. Yeah, because the that was a put calendar on XLF, so all we care about is we paid almost nothing for that trade. Hold on for 1 sec. Let's try to share the screen again. Okay, give me 1 second. It's not sharing. I got to do something here. I'm just looking at volatility trades. I really like the double long diagonal. The only thing is that particular trade is expensive. Okay, I don't want to spend $1,100 on that particular one trade. Hold on for 1 sec. Yeah, I'm gonna share it here in a minute. Yeah, I was having issues trying to share it. Let me see if we can share it one more time. Okay, let's try it again. StreamYard sometimes doesn't, you have to select the app again that you want to share. Then you got to go back to share the screen. But yeah, that double long diagonal that Mark was talking about, I do like the fact that volatility has been, I mean, if you look at vols, let's see, ARC, we're long ARC. No, we're calendarized ARC. No, that's a butterfly. That's the butterfly we did. So ARC, we like it to go long, but if it stays where it's at or it doesn't fall too much, I don't mind. If it goes up, I'm great. It's all good. If it goes down a little bit, as long as it goes down into our short strike by December, we're good. EEM calendarize, I don't care. GDX, 8 deltas. Okay, so we're 8 deltas. That's a strangle. 36, 32. I'm not going to freak because it's only 8 deltas. The weed stock we went long on. I don't care about SCMI. We already discussed that. Tilray, marijuana, the other marijuana stock, which is basically we only spent $4 on it. I went long on that. TLT should be a strangle. Let's see. No, TLT was another butterfly. As long as TLT, I don't know for 1 sec. As long as TLT doesn't collapse to the floor. As long as it doesn't collapse to the floor, 88 is our wheelhouse for TLT. It's 89.57. TLT, let's go and see what that looks like. Yeah, it's getting close to our when I say the wheelhouse, we're talking our short strikes. Oh no, wait a minute. I could care less about TLT. Yeah, I'd like it to get down there. I forgot TLT's free. We don't have to do anything. That's a free trade. Yeah, so if it got down there to 88 in December 20th, that's a free trade. VIX, we don't care about. VIX is basically, the Donald Trump play. I was thinking that it would spike, but here's the kicker. VIX could still go up by, in 39 days. Why? And I'll mention this on the Rant channel. Did you know that right now, in terms of U.S. government, again, this was a Trump play. Like the XSP trade we did, that was a Trump play. Did you know that the initial reaction from the uncertainty of their elections, markets soared to all-time highs? Okay, you have E-mini S&P, or I should go to the spiders. They were at 6,000. Everybody, Bitcoin through, everything went through the roof. Yay, Trump won and this and that. The reality of this crazy ass environment with an administration that is literally like the Keystone Cops, which I don't mind. You know, Trump's administration, it's going to crash and burn like you've never seen before. It's going to crash. And along with it, you have a Federal Reserve that said, you know what, we're not going to cut interest rates. That's kind of like putting salt in the wounds. Because remember, Trump wants to get rid of Jerome Powell. So why should Jerome Powell try to cut rates? You know, Biden's on his way out, and that's the only reason why they were trying to manage an economy, because they thought that they would have a job. You know, because if Biden stayed in, the status quo of of the financial institutions, Fed, Treasury, and everything else would still maintain. There's no incentive to go ahead, and so Jerome Powell's like, well, you know, I'll just go ahead and play this out until Biden leaves. Whatever happens after this happens. So you best believe inflation will go through the roof. Powell and they'll be less incentivized to maintain the status quo, to, like, you know, playing that dance versus cutting versus holding, or I should say cutting versus raising interest rates. The dance it's a lot less. The music has changed with a new administration. Keep in mind what's going on. I mean, it is a shit show with Donald Trump. You've got this issue with Elon Musk. You know, I mean, that is a complete cacophony. Elon Musk lied about meeting with an Iranian diplomat. Trump lied about meeting with, or that phone call with Putin. I mean, it's already coming out that this whole thing is just, you know, one big shit show. You know, because I mean, when folks do that, folks have to adjust portfolios for stuff like that. You know, look at oil, for instance. If you look at oil, let's see where oil's been. I mean, oil's destroyed. If you know, I mean, it's been, you know, I mean, it's basically trading in a range, you know, since, I mean, since what was that, September? The end of September is basically in a massive range. Or for those who are very technically minded, in a pennant pattern. But the thing is you would think that it would have an impact, saying, okay, Elon met with the Iranians, maybe there is détente within, and so therefore, you know, maybe oil prices should go down. Well, why is it up almost 3% right now? He lied. The so-called war is still happening. But I'm going to tell you this much. This is something I would definitely want to do a play on, a volatility play. Why? Because oil, if I'm looking at this, look at this. I would not doubt that oil would break out like crazy. I would not doubt that you have a scenario where oil can literally, like, you know, oops, let me do this again, where oil could literally, like, either break out or break up like there's no tomorrow. I mean, there's a what they call a pennant pattern. I can't really see the line, so let me just do something here and change my lines, because I can't really see it. I got to lean up to the screen so I could actually see. But I mean, just looking at this right here, let me change the color if I can. Can I? I can barely see it, so how do I change the color of these lines? I used to know. I used to know how to do it, but now I don't. Okay. Man. Okay, trend line. Here we go. Oh, come on. Okay, a right click. No, I don't want to make parallel. You should be able to double click it. I know there's a way to change the color. There we go. Double click. I don't know why it didn't do it. I double clicked before and it didn't want to do the bottom line. Let's try it again on the bottom. Yeah, that's one thing I noticed. Oh, come on. Okay, let's go to the bottom line. Wow. It's just not. There we go. It just takes it forever. Come on, Tasty, get your package together. Anyways, yeah, Tasty got to get their shit together, make it easier for traders. Anyways, because traders are all technical. Anyways, this thing could break out either way. This thing. I mean, and chances are in a pennant like this, the previous was lower, so chances are this thing's gonna break to the upside. I'm not gonna say it has to, but I'm saying it wants to. Chances are this thing is it's gonna be a huge move in oil, and I would more than likely see that unless something crazy happens and Iran decides that that they want to be the next state of Israel, being annexed by Israel. I don't think it's gonna. I think it's gonna be the opposite. Like you're gonna see major war. I mean, look at volatility. Volatility has been trending down and literally getting destroyed. And normally, when in commodities, when markets go down, volatility, volatility goes down. So it's just telling you that this thing is clearly there's the ATR is through the roof on oil. Now, I would never make a trade on oil because that's the widowmaker. But I would do options, but I would do it on a mini contract and not because this is just a huge contract. But look at that. You would think that if Iran met with Elon, that you wouldn't see a 3% hike in oil in a day. It would be like either flat or oil would continually just be destroyed. But since his so-called meeting, volatility went up. So I'm just kind of like, yeah, all right. You got a shit show as an administration that's in right now. Being that how crazy it is, my thing is like, hey, I could see that they're so-called, they've reached the 6,000 point. My thing is, you need a cooperative financial institution or apparatus to be in conjunction with whoever the administration is. You need a cooperation. AKW, good to see you. You do need cooperation. You need, if whoever's in office at your administration state, you want a very cooperative financial apparatus behind you, which means Fed, Treasury, all the Fed, the whole 9 yards. All those, Fed banks, banking sector, you want that to be in cooperation. Well, because you have a shit show of an administration, and you've got a bunch of Fed governors that know that their jobs are gone. They know it. Jerome Powell, Trump already said he's not lasting. I think his term is up on 2026. And so they're looking at saying, well, why should I even cooperate with this guy? I'll do my job, but I'm not going to do it as if I were to do it with a possible Harris administration. I'm not going to do the extra stuff to go ahead and help that administration. Because why would I want to help Trump? He's getting ready to get rid of us. So if you got that happening in a very uncertain environment, you've got geopolitical constraints, you've got inflation, which is still through the roof. You have a slowdown of economy. If you look at the latest so-called numbers coming out, everything from BLS and everything else, you've got a massive possibility of stagflation. And no Fed governor wants to be around in stagflation. Nobody does. So I'm looking at that thing that Mark Felton was doing when he was talking about volatility. I'm not saying it's like market's going to crash tomorrow, because they very well could. Everything's flat. You've got volatility. Everything is flat now. It's kind of like waiting for the shoe to drop. You got administration that lies, and they're not even in office. They haven't even sworn in, and they're already lying. So it's going to tell you how crazy it's going to get. Because, remember, international, everybody's setting portfolios for the likelihood of what may happen. And when I say portfolios, I'm not talking about stocks. I'm talking about, for instance, look at whether it's SCMI or NVIDIA or what others, they're saying, if this administration comes in, what does that mean for regulations? What does that mean for the cost of money for us to operate? What does that mean if there is tariffs? And, we have all these different international producers, and supply chains. It's going to cause their margins to go up. So they have to plan their portfolio for that. So so everybody around the world's portfolios are being planned, and now you got an administration that is clearly batshit crazy. I love this. I love this. Yeah, I mean, purely batshit crazy, lying through their teeth, talking about, I mean, here you have, I mean, their cabinet has no clue what's about. They don't know how to run shit, which is great because they're quote unquote anti-establishment. It's like me. I think it's a Class C license. I don't have one. I can't drive because I'm blind. And that's like me going ahead and getting approved to drive semis or buses. Yeah, here you go. Go in. And I'm like, hey, okay, thanks. This is clearly what other nations and other companies and the whole world has to plan their portfolios for. Saying, okay, okay, you're going to go ahead and, drive buses. Okay, no worries. So now, I mean, knowing that that's the case, the only thing I could see is volatility for the next 4 years. I cannot see it being, I don't know how they're going to be able to kick the can, no matter who they're going to get to replace Jerome Powell, because he already knows he's on the chopping block, not just him. You've got others that are more than likely going to retire. So my thing is, you're going to have other folks, and more than likely are going to be loyalists, and so that makes the whole financial apparatus uncertain. That whoever they're looking to get in as Fed chief and Treasury, they're not going to be tried, true, and tested. They're not going to be individuals that are literally the so-called establishment that knows that, hey, we got to try to keep this thing afloat. So, I mean, my thing is, I'm digging it. I am digging it because it should bring volatility through the roof. But anyways, let's go and see if there's any new trades. I'm looking for buying volatility. And that was the only thing I could look at. Of course, we did the emerging market one. We got that calendar. We got the other one. We've got the calendarized on financials. The only other thing that I'm looking at calendarizing is either energy. Okay, either energy or because I'm not going to sell premium right now. Plus, it's Monday, and I don't like to do premium selling trades yet. Because if we look at our IV rank, it should be pretty close to where everything we've had before. Everything's still the same, IV rank wise. But when I'm looking at premium buying, I don't want to do the individual stocks because I already got some out there that I've calendarized. But if I did that, it would either be energy. Let's go to XOP. Let's see where that's at. XOP. No, that's a little too high. There, USO should be the same in terms of it's still a little high in terms of their volatility. So I couldn't do that. Let's go to USO because I want to get into two things: energy, because you saw how oil's volatility went down. Nope, that's too high. These are more for selling premium than buying. Because I want to take advantage. Look at that USO, and I never really trade USO. Unless I buy it. I had it as an ETF a while back. If I did USO, let's go to January and just see this. See, this is a premium selling and not a premium buying. Wow, interesting. It's not really any contracts out there. If we go out to the 17 delta, go out to 17 deltas, go out to 17 deltas, 220. We're only getting 10% of the buying power. I would never do this. Even if I wanted to do this as a condor, go out with a $5 strikes, 63.58. Even if we went out like that, 101 at a 3, okay, it's still not great. We're not getting a third the width of the strikes. We only got a 55% chance probability of profit. It's not really the more credit you get, the higher your probabilities get for profit. So I'm not going to do that. It's definitely. But I was looking for let's see, what is the other one? The mini. Let's look at some minis. Let's go to the watch list, and we're going to go and see the small exchange. Let's see. I could go. If we could go to the small exchange, and see if there's any options in that. We could either go micros or small exchange in oil and see if we could do some options in that and the small exchange. Let's see. Futures micros. what do we got here? Filter. Let's reset that because I don't really care about this. Oh, wait a minute. I don't think that this one has. Let's see. Let's just reset the filter. Reset it. There we go. Let's go to, yeah, because I don't think we have that. Because I had my filter for earnings and stuff like that. Let's go to, oh man, see on the micros what we could do for some oil and see if there's any liquidity on the oil. Because if we look at the micros and oil, that should be the same. Again, it's the same. It went down. Volatility is it's still. I mean, we were at 40 for volatility. It would be great to see volatility go down further, so we could see if we could calendarize this. We went to the micros and oil. That's why I got to hand it to Tasty Trade, man. I am digging their futures. We went out to that. What could we do on that? We went out to the deltas. Let me let this populate. Let me just see where their deltas are at on the 16 delta. And I got to hand it to Pete Momat. Now, see, the thing is, they expect this thing to move. So you know what? We're going to go out to the 11 delta to the expected move and just see what they're looking at. We'll go 12 deltas on the expected move. I got to hand it to Pete Momat, man. I was able to check. They had a really good seminar when I went there. Wow, look at the 12 deltas. 12 deltas is literally, literally, I mean, that's $79 is 12 deltas. That would be a $10 move. So this thing is definitely, but there's no liquidity here. So there's nothing I could do. If I went to the expected move, 219 of 8 in terms, it's not great. It's still not giving me a third of what I'm looking for in that. Let's go and see in the smalls. Because now we're just looking at some futures trades, options and futures. Futures. Let's go to the small exchange and see if there's any options in anything. Yeah, we only got. There's no. There's nothing we could do because this is. I don't think there's any options on these. Let's go to the 10-year. Yeah, I don't think there's options on the smalls, but the futures. The minis or the micros, excuse me, the micros is what I'd be looking at. Yeah, I definitely like the micros on that. But I'm looking for, you know what? Let's see. If we're not going to do it in oil, we know we could do it here. Because we know that our volatility rank is what? 17? That's nothing. So we could do it either on the micros. Let's see if there's any liquidity out here. And we did a calendar. Now, I like the fact that like a week from next Friday is cool. What's that, like 14 days? Okay, we got 7. So we got like 12, about, what is that? 14 or 12 days, something like that. So we went out and we, again, that's why I love those trades. If we did a 29th, 11-day, we would go 11-18. If we calendarize this, the same thing, with the exception of, I would not go out. I'm just trying to think. Let's see what our, if we were to calendarize this at the expected move. So that's 24 deltas. 24 deltas. Let's go 24. See, at the expected move here, we're at 19. Again, it's telling you that they're definitely looking at this thing possibly going down to the floor. So if we calendarized it and we went, we'll just start $5 up on each side. So that would be, we would buy the 60-30, 60-30, 58-10, 60-30, 58-10 in December. 50-30, 68-10. Or 60-30, 58-10, 60-30. We bought that. There we go. We buy that and sell the 58-10, or buy the 58-10 to calendarize this. What would that cost us? Yeah, so that, I mean, that would be a little expensive. You know, that would be I don't want to spend $1,900 on this. You know, if I were to do this as I could do it on the XSP for a lot cheaper. That'd be like 190 because that's 1/10 the price. That's if I did that. For me, it's a little too it's just a little too expensive to spend that kind of money for calendarizing. You know, for me, it's just too much. You know, I mean, I could. I mean, the double diagonals. You know, I mean, we had the 5830, 5830. Let's see, or 5925, 5820. So let's try that 5925 and the 5820. Let's try that 5820, 5935. Oops, that's the one we want to sell. 5820 and 5935. So we got the 5820 there, 5935. Let's go here to the top. And oh, you know what? I hate when this happens. Let's just do this. 5820. Sell the 58. Wait, we're not looking December. We're looking for November. We'll sell the November 5820 and 5935. And 5935. We don't have a 5935. So we'll have to go to 5940. So we'll sell those just to see, just to see what see 5820. Well, actually 5925. So we'll go to the 5930 because I don't think we have a 5925. Yes, we do. So we can do that. 5925 on that one. So let's go and drop that strike down. 5820, 5925. And then we're going to go in and look at that strangle trading. Look at where that's trading. I couldn't do that. That would be way too much for me. I don't want to spend that kind of money on a diagonal. It just doesn't make on calendarizing. Sometimes I may, but I don't want to tie up that much buying power. So if we would buy the 2030. So we'll go $5 on each side. $5 on each side. 59, 20, 30. So the 2030. What do we got? The 5925 call. So 5920, because we're going long 5920. Are we sure that's 5925? Hold on. Let me just double check. Okay, SCMI got filled. So we're out in January on that. So we'll see if we're okay. 5925. Which one are we buying? Buying the 20 call and the 30 put. Buying the 20 call. Buying the 20 call and 5830 put. The 20 call and the 30 put in December. 5920 call, 5830 put in December. And then selling 5925 call and 40. Okay, so selling $5 out or $10 on the downside. Selling $10 on the downside, which is, so we're selling the 40 on the downside. Oh no, we're selling the 20 on the downside and 25 on the upside. Yeah, this makes sense. 33. Okay, buying power effect 176. I don't know about that. That's kind of like, one of those trades. So we got filled in SMCI. Give me 1 second here. My sinuses are killing me. Give me 1 second. Yeah, my email, I'm getting like thousands of emails for some odd reason. What it is Gmail's just trying to catch up. You know, Gmail is they're trying to okay. Okay. Let's see. Okay. Let's see. It's this. Yeah, this actual, the future spread that's there would only cost us about 182 for that particular spread. Okay. So we got a little bit more credit on SMCI. Let me just do this. Give me 1 second. Share my screen again. Man, my sinuses are killing me. So that would cost, because you have to take the futures, and you have to the futures, because it was 33, I think, is in terms of the futures. How much was that? 33. And what would that be in terms of the cost? Then it's times 5. That would be times 5. I think our total cost would be 167, $1.67 on that. And I got to double check. But anyways, yeah. So the SMCI trade got filled. We've got this trade going out to February or to January. Now, if I wanted, I just got $1 and some credit. What was that we got? How much did we get for that? We got activity on that trade. We got $1.53 credit. Let's see what it's trading for right now. Similar order, just to see. So we could have made 2 cents more. So what? $1.55. It was like $1.53 to $1.60. So so it's close. Anyways, so if we got that, our trade is now in January. Now for the January, we're at 21 deltas, so that's a 42% chance here. But we still have, we've damn near, they're saying it'll damn near hit 58. So we're definitely delta-wise, we're definitely 24 deltas now. Again, volatility, because if we look at where it's trading, it's still in between the strikes. But I don't want to chance that. It's still in between the strikes, irrespective. And that's all because of volatility. Why it's just literally just going, it's just definitely a meltdown in terms of volatility. Because we're definitely, of course, we're not delta neutral on our mountain. We're down off the mountain right now. And that's all volatility. In terms of the expiration, yes. But in terms of the mountain, we're definitely off the mountain. So my thing is theoretical the theoretical, that's all volatility. Theoretical, the P&L theoretical, we are 26 deltas, but our P&L theoretical is only $7 down. Yet, theoretically, we're still taking a major market loss. But again, I expect this stock to actually collapse, because they're talking about delisting it. And when they talk about delisting, once somebody says delisting, you best believe that this thing is going to zero. And so getting that credit is a lot better, because SMCI is going to go to zero. There's nothing that can stop it right now. It's done. It's going, look at the volatility. Just through the roof. There's nothing that can bring the stock back. Nothing. Especially now that you got this administration in. I would tell folks to just buy as many puts on this as they can, which I may end up doing, because this thing is definitely, there's nothing that can save this stock, nothing. But anyways, but the main thing is just getting as much credit as possible on the stock. But anyways, doing that, the XSP, either that or the XSP doesn't have the liquidity for this particular trade that I was looking at for the micros, the futures. This is the index. It's not the futures. The good thing about this is this, like the other one we did, the Trump trade that didn't work out, it'll literally, it's a cash settled, so you won't be assigned. And that's why I like to do indexes, because there's no assignment. But the thing is this one doesn't have the liquidity that the futures, that the micro futures has. It doesn't. Micro futures didn't have a lot of liquidity at that particular one, but it does have more. So if we did the same thing here with the 29, we would be going out. Let's see, what was our deltas? Because I want to do this deltas on the micros. I want to do this using the same deltas that I was looking at. The 29th was 25. 58.25 and then 58.20. So we were looking at, okay, so 25 deltas there. And we were 44 deltas, 25 deltas. And what was our deltas up there? I gotta hand it to Mark. I have to thank him in terms of his analysis, in terms of just looking delta wise, where where the probability or possibilities are delta wise. I do have to say that, I definitely have no problem with, doing that calendarized spread. Our calls were, what were the calls? 59, I think it was a 59, 59.20 calls and 58.30, 59.20. So the 580 or the 592, 583 is what we'd be looking at the meat of this trade. That would be, let me just double check that. Yeah, so that's the 592, 583 are the meat of the trade. So the 592, if we were to do this on XSP, 592, 583 on November 29th, 583, 592. So yeah, 45, 29 delta. And then we would sell, if we were to do this, we'd be looking at oh man, what deltas could we sell? Because again, we're looking at a scenario where it's we're using the XSP instead of the ones where you have the big ticket ones, which are the SPX and the micros. So what would we sell on December? We would sell the 592, 582. But the 592.25, we would have to sell the 593. 593, 582 is what we would have to sell. So the 593, 582, that changes everything. 582, if we sold that in December, 593, sell that, and see, there's no liquidity, so there's nothing we could do there. 593, 582, no liquidity. There's nothing we could do there. But if we were to do this trade, again, there's really no liquidity there. So we would, we sold the 14, 593, 582s, and we bought the 583, 592. Yeah, we couldn't do this. Yeah, that would, there would be no way to actually, because we're selling. Oh, you know what I did? I got this mixed up. This is why. Hold on. November 29th, we want this to be the next expiration. December 2nd, and we want this. That's why I was looking at this going, wait a minute. So we want to take these off. And we want to make these the shorter expiration. There we go. So December 2nd. So the 592, 583. Okay. So we're selling. See, I got my strike. Hold on for a sec. Okay, 592, 583 is the put and call where you are. Okay, Just double check. We're selling the December 582. Selling December. Let's go to 593. Okay, so we're selling these. And then we're going to go and we're going to buy. And we're going to sell these. Oops, we're going to sell these on the November 29th. So we got to bring these back to November 29th. There we go. And then, so we're selling that 592. Let's see, 592, 583. Oh, you know what? Hold on. Easiest way to do this. Okay. 582, 593. Cool. And now the ones we are buying. Okay, there we go. There we go. Now we can move these strikes where we want. Okay, so which ones are we buying? Because I want to make sure the ones we were buying is a 592, 583 buying. 592 or 593, 582 selling. 593, 582 selling. So 593, 582 selling. 582 selling. Buying. Buying 592, 580, 592, 583. 592, 583. 591, 592. So we're going to get rid of this, the one we're buying. 583. And we're going to move that strike down. So 592, 583. 593, 582. Now it makes more sense. Our diagonal. We're getting paid $6 a day. We're basically delta neutral, getting paid $6 a day. Volatility could hit us, but there's no liquidity here. So it's not like this trade would really be anything. I would have to do this in the micros, in the micro futures contract to actually make this trade. You know, we're spending a little bit more on the futures than we would spend here on the index. Because I would never do this on the SPX because it's just too. The only thing is we have I don't like. I mean, I like indexes just because they're cash settled. I like cash settled stuff when it's big ticket items. When things cost a lot, I want it cash settled. So therefore, I'm out the trade. There's no having to deal with rolling over in different months and stuff like that. And we're in about when it's like stocks. We're in about assignments. I'll keep this one on. But this one is one that I would definitely, because I'm looking to buy volatility. I expect because the whole Trump illusion is gone. The whole Trump, honeymoon has been gone, and all they had to do was lie a couple of times. So all he and Elon had to do was talk shit, and so the whole honeymoon is over. And therefore, especially when you're talking about the whole financial apparatus in terms of Fed and Treasury, that honeymoon is gone. It's not here anymore. So my thing is to take advantage of it. And how can I take advantage of it? That's in other words, I don't expect the market to go up anymore. It already hit its 6,000. Trump kicked the can from Obama. Obama kicked the can. Actually, Obama was the only so-called president that actually started this new uptrend that hasn't stopped since Obama was in office. And that he literally saved it. He became Magic Negro. He saved their economy. Trump kicked the can. Biden kicked the can from Trump. And I don't think Trump could kick this can anymore. This is all basically golden parachutes. This is for others to get out with golden parachutes. That's all this thing is. It's one big golden parachute. My thing is, hey, I don't mind that. If it's one big golden parachute, hey, let me know exactly how to put mine on. And I'll jump out the plane with them. That's what I'm looking at right here. Okay, see, Tilray, none of these other ones, the marijuana stocks, really, I don't care about those. But anyways, so, we were able to roll one. Oh, wait. Before we leave, let's see what we got on X to see if that X is still Oops, I guess I got out. Let me see. I want to see if that X trade, if I need to move that strike, because I do want to roll these over to January to get more credit. X, I'm just doing it just to do it. SMCI, I have to do it because I have to do it. I want credit out of that particular trade because I have a feeling SCMI is going to go to zero. Then it may go to the moon. That's what they're saying, that this thing, but when I'm looking at the mountain, he's off the side of the mountain. I don't want to tighten up those deltas, especially on a stock that's fixing to go to zero. I don't want to move my puts up knowing full well that that stock's going to zero, because I'm just getting myself closer to the lion's teeth. Even if, and again, it's a volatility thing. This is pure, it's all about volatility. The SCMI is, our mountain basically moved from our expected move because of the fact that it's, that they're looking at this thing to collapse. But let's look at X real quick and see if, 108 to 130. Okay, let's see something. Let's see if we want to even replace that order. Let's see what we got going on. Or, before we even do that, let's see what this trade is on X, because I do want to roll that down. Look, again, volatility. Look at that. You see the vols, that's pure volatility that made that do what it did. That means the volatility expanded. If I rolled this down, like if I wanted to roll that down to kind of tighten up the deltas, again, I wouldn't want to do this. Why? Look at our deltas. We're still, we're basically damn near delta neutral. We're delta neutral on this. But rolling it out, I don't mind that. See if we could pick up some more credit. Thing is I got it 130, just out of 111, which is the natural price. So if I wanted to do this, I'll bring it in a little bit, and I'll see if it'll fill me there, and I could pick up some more credit out of this. Because should it decrease volatility, that should give me, with the amount of credits that we're getting on this, it should at least bring us back toward, somewhere back toward, to reality in terms of profit, or at least mitigating losses. So we'll do that. So anyways, I'm rolling these out to again, remember I was telling you when we met, Brother Will, that you could either roll the strikes or you could roll the expirations. And we're just rolling the expirations out to buy more time. That's all we're doing. This is all about getting more time, and more time means more credit. That's all this is. Get more time so you can get more credit. And because that's the basis of what, again, we're selling volatility. And that's all this is. And the other ones, I'm gonna sit on my hands and see if there's more liquidity coming into XSP, I may take that trade. But I do want to start buying volatility now. Not selling it. We've got a lot of sell positions that we sold volatility on. And two of them, of course, went awry. I don't care. I'm gonna sit on that, but now I'm looking at buying volatility because I think the honeymoon's over for Trump and Elon Musk. Anyways, y'all take care.